Hello, can you hear me?
Yes, I can. Can you hear me?
Excellent. Yes, I can hear you and even see you as well. How about that?
Yeah, that's a lovely view. Where are you?
I am in, I'm in Cromwell, overlooking Lake Dunstan. Well, you're overlooking Lake Dunstan at the moment.
Yeah.
This is the only This is the only spot I could actually get. I'm under this. There's a tree sort of over here that gives me a bit of shade to see the screen, because it wasn't really suitable in the motorhome to sort of set everything up. Unfortunately, I don't know if you can hear it, but there is a lawn mower that has decided to start up, a ride-on mower that is just over on the other side of the field, and I believe it might come over here in a minute. So if it does, we'll have to cut short, but we can come back. It's not an issue. But if the lawnmower becomes a problem for you,
Yeah, that's right.
then just let me know.
I
Uh,
will do. First of all, it's very kind to take my call.
that's all
It was
right.
if you're travelling around. If you're travelling around on holiday.
No, no, I'm not actually on holiday. Just a quick recap. Well, I've sold my house and every possession I own actually at the moment,
Oh,
apart from my motorhome and a few other bits, and we are. We'll be here for a couple more weeks. I'm waiting for some medical stuff to happen. I've got some sort of thing, tendon come away in my leg, which I have to sort out. And then we're off to Australia, and then we're going to be doing Europe this year as well. So, as I'm taking sort of a year out from being in one place, as it were. That's why I sort of decided to set everything up and have a move around. But look at technology. I'm sitting here on a camping chair in the middle of we could be in the middle of a field as long as we have internet connection. So yeah,
there you go.
it doesn't matter at
Yeah.
all. Just one more thing before we start. Your
Yeah.
your questions sort of intimated that you were on this rapid fire section where I was only going to give you so many minutes. I really only put that on the internet so that I don't get calls that just go on and on and on and we ramble.
I
But
understand that.
don't
Yeah.
feel under pressure to. Oh, I've got only got this many minutes. We will go through and make sure that you're happy with everything as we go through. So that's our introduction introduction done about where
Brilliant.
we are
Yeah.
today. So you fire away what you want to do.
Right. So it was the purpose of my membership. Is I was looking for someone to be with me as I sort of progressed through any blockages and fears I had up to the million.
Right.
So I would assume that there's a start and a finish. Is there? Do
Okay.
we choose how to?
Okay. I'm really glad you brought that up, because that sheet, of course, is a factual sheet. That is how you take that amount of money, and that is how you make $1 million in less than a year. That is a factual
Right.
sheet. Now, the problem you will encounter, and I don't care who I'm talking to about this, the problem you will encounter is you will go along this sheet and you'll feel okay. You're very happy with it. You'll get very comfortable. You'll start to feel elated, but you will hit a point where the money impedes your decision-making process. I
Right.
guarantee you, and that is a very dangerous point because at that point you'll make rash decisions. You will make emotional decisions. The money will lead you into the market as opposed to you taking money out of the market. It will sort of draw you in. Now, what you have to do at this point, and a lot of people don't like the idea of this, but what you have to do at that point is stop. You have to withdraw money from your account and you have to go back. Now, I'm not suggesting you go back right to the beginning of the sheet, but you go back to a point where you are very comfortable. You feel
Yeah.
mentally very comfortable. And then what you do is you then come forward again. Now, what you'll find is that as you come forward again, you've got this history behind you. And so your next point of running into trouble will be at a higher level of money. But you will encounter it yet again. And this is going to
Right.
be.
So you're reinforcing your beliefs all the way up.
That's right. Perfect. You've got it. You've absolutely nailed it. So
Yeah.
you're
Yeah.
reinforcing this piece, and it doesn't matter, Jerry. I don't care if you make $5,000, and then you start to get thinking, oh, okay, but you've got to detect this in yourself. I cannot tell you what
Yeah.
this amount is. So you might get to $5,000 or $10,000, and things become, oh God, this is whatever. Okay, pull it out, put it to one side, go back, start at your low level. Now, like you say, what you've done is you've given yourself a little belief. Hey, I can do 20 grand. Okay, let's do it again. And that's how you come forward on the sheet. So hopefully that's sort of answered that. But if you get, we can work through that as you start
I
to get onto
understand that. Yeah.
Okay.
Yeah, I understand that. On how many trades a day sort of occur with this system, or with this, not system, with the market maker's business model?
Okay.
With safeguard currency.
Another great question. This is a question that's sort of based upon traders looking at patterns and scanning markets. So they'll see how many trades they can find or how many patterns they can find that match their criteria. And so they'll say, okay, well on average I can find these patterns 10 times a day, and so on average you'll be trading 10 times a day or 8 times a day or whatever that might be. The difference when you're trading the market maker's business model is you are not looking for patterns. You are looking for a process. You're looking for the mechanics of the market maker's business model to unfold. So you are looking for this. You are in effect a detective. You are looking for your first clue, and that first clue could be any one of the three things. It could be accumulation, manipulation, it could be profit release, it could be any of one of those things. Some people say to me, oh, you need a stop take first. Well, hang on a minute. You might look at the market and you're not in that phase. You're in a profit release phase. So if you were in a profit release phase, for example, you'd say, okay, we're into the phase. Is there any room left in this for me to get in? Or have I just got to wait until that phase ends and I know that they will go back into the accumulation phase again, because there are repetitive cycles. So how many times you're going to trade, in answer to your question, is you're going to trade when you identify the phase that you need to make money in. So your trading is entirely dependent.
Profit release phase.
That's right. And your trading is entirely dependent upon the market maker's business model, not what you can sort of find in a chart or come up with as a trading, or now I want to trade, or now I'm going to do this. You see, a lot of traders will come to their screen in the morning and just start scanning markets. They're just scanning endless markets, looking for this pattern. And that is not the way that the market maker's business model works. You're looking for this business model that you can say, okay, that's the model. This is where they are in it. I'm now going to prepare to trade with them into their profit release, and that's what you're doing. Okay, did we lose you there a minute?
Yeah, we only trade the profit release. I like the idea of that.
Yeah.
I like the idea of being able to look at the chart, see that they've accumulated, look, they've manipulated the market.
Yeah.
Okay, they've moved into profit release. That was one of the questions. That the jump bars.
Yeah.
It's about the jump bars.
Okay.
If I see an accumulation area, I then see them put a jump bar. Let's say they put a jump bar down.
Yeah.
Okay. So, and then they put a jump bar back up again.
Yeah.
They've okay. How do I know that they're not doing a breakout? Would it be by the colour of the... Right, does a jump bar have to be... If it's going to be up, it would have to be blue for it to be a recognised jump bar.
Okay, well I'm going to stop you there, because you're making what you're doing there is you've now gone completely off the track of what we're doing here. And it's not a criticism, that's just the way the human mind works, that's how it goes. So you're looking at what happens now is you've gone from looking at the business model of the market makers, you've gone to looking at bars, colours, shapes, okay? And now we're in trouble. Now what we're using a jump bar for at any one point in time is only to give us information as to where in the business model the market makers are. That's all we're using it for. So you don't say, oh, this is a jump bar and this means this. You say, okay, this is a jump bar. How does this relate to just what's happened? Now, if you can tie the relationship
Right.
with that bar, so in other words, let's suppose that you see
Yeah.
this jump bar up, and you see a jump bar up. Now, a jump bar up on its own means nothing. Well, it doesn't actually mean nothing, but we're going to assume it means nothing. Okay? Especially when you're starting, I don't want you to read too much into that. And what you want to say is, okay, all right, I've just seen this jump bar up. What does this mean? Oh, I don't know. Okay, let's just look back and see what might have caused this. You look back to your left. If you saw a stop take, and then you'd seen this jump bar up, you see how the jump bar has alerted you to say, look back now and see why this happened. If you've seen
Okay.
that stop take and then you see the jump bar up, now you've got valuable information. The jump bar has told you why it occurred. It's not just a shape, it's not the jump bar, you now know why it's occurred. And once you know why it's occurred, you are empowered yet again.
Okay, so what would be the difference then between a jump bar that defines the beginning of the profit release phase and a jump bar that is actually a stop take?
Okay,
Because it would
a jump bar that would be a stop take, it's, for example, let's suppose the market's coming down, all right, and then you get a jump bar, so the market is trending down, and you get a jump bar down, okay, that jump bar down is actually a continuation, isn't it? It's a continuation of the existing move. So it could be genuine weakness playing out. Now, that's great. If this is the case, we don't want to enter here. This is too dangerous because after this jump bar down, this market is going to retrace. So as the market retraces up, we're watching and watching and watching, remembering that there was a jump bar down. So we're watching, and if that jump bar down was a continuation of weakness playing out, we are guaranteed to see the market rising up, rolling over on a retrace, and then down. We're guaranteed
and then
to
we
see
put
that.
and then that gives us a position to put the trade finder tool on, or the
Perfect.
90 pip tool.
Okay, so now can you see what you've done? You've used the jump bar. This is why I try to get people to focus on the jump bar, but not focus on the jump bar. The jump bar itself is calling you to say, okay, in what phase are the market makers here? Where is this going to? Where can I profit from this? So it gives you the indicator to start looking around. And once you've got those, Jerry, believe you, it's very easy to start putting the picture together, because one of the problems with trading is that when you're looking at the whole screen and you're looking at all the bars and everything else, and you're looking at patterns, your brain is trying to find a pattern, something that's repeating. And of course, if we change the time frame, we get different effects. Certainly on a candle chart, we get massive different effects. Whereas I'm saying to you, don't bar watch. Now I know there's a contradiction there, but don't bar watch. Don't focus on these. Only at the point where this bar tells you to now, okay, this is now what we're going to look at. So now you become looking at this, but you don't sort of scan the whole thing looking for patterns. I mean, if you had a jump bar, Jerry, for example, in a market, you saw this jump bar, you saw a jump bar up, and you saw a jump bar down, and you couldn't tie that in to any preceding action that made sense to you, just ignore it.
It would just be volatility, wouldn't it?
Yeah, exactly.
Yeah.
There'd be volatility.
Does the PAT system work better at market opening? Are there different times where where the market maker's business model plays out?
The market maker's business model will play out at the time when they can maximise most profit.
Oh, okay. So that's when everyone.
Okay, so that might be at any time where they remember they know the information, they know the strength of the market, they know the weakness of the market, and they will have accumulated accordingly. So let's suppose, for example, people say to me, "Oh, news moves the market." Well, yes, it moves the market, but where does the news come from? The news comes from the market. You don't go into your local butchers or bakers to get market news. The television crews and all the stuff have a direct link into the news releases that are coming from the market. You know, all the figures and everything else. So the markets themselves are generating the news for the markets. Okay, so if you want a market to move in a particular way, and you'll often see this, where you'll see the news will come out and everybody is forecasting this incredible, oh yeah, the results are going to be great and everything's going to be good and blah blah blah, and all of a sudden the market goes completely the opposite way, and then a pundit jumps up and says, yes, it was the meeting in Davos that did it. It was they wanted it to go this other way, and that was the opportunity, was the news. But again, don't get too caught up on this, because remember, it's just their model, their profit release. That's all we're after. Okay?
It's their business model. Yeah, we're just linking onto it.
Yeah.
Brilliant. That's really cool. I think the time's up, Martin.
Okay.
That's one question is, I've just watched a video that you did in 2015 on how to make $1 million.
I had a lot more hair then, didn't I?
And totally, Martin. Yeah, back in 2015. And does the same trouble with brokers exist now as it did back then with spread bettors?
Look, you are going to encounter a problem with spread bettors later on. Let's say problems. Look, I don't want to say that like problems. I'm not. I think spread bettors are great when you start out. I really do. It enables you to get into the market. But of course, you're paying a lot of money. I mean, once you get into your $1 million in a year sheet, and if you look at the amount of money that spread bettors will be pulling off you in fees, it's astronomical. You then need to go to a more direct broker. So now I don't get any kickbacks from brokers. I'm constantly asked by brokers, will I recommend them and stuff like that. I don't do that. I think it'd be a conflict of interest for me to do that. I'm not interested in it. Look, some of the early online brokers and really probably the market leaders, IB, Interactive Brokers, without recommending them, I'm going to recommend them. That sort of thing.
Yeah.
They're very good, very professional. And they sort of were the leaders. They sort of came forward with online dealing. It's interesting that when I started with them, they had this platform where you dealt online, and then gradually over the years, this platform morphed into something much more advanced and everything else. But even today, you can go on and open an account with TWS Original, the original dealing platform, which I love because it's so simple. But of course, anybody going in today would look at it and think, "Oh Jesus, that's a bit ancient. It's a bit, and they like the new stuff going on." But I can't be bothered with all the flashing bells and whistles. I want to get in, want to get out. That's what I particularly like. For me, simple is good.
Yeah, I understand. I'm with IG anyway.
Right.
That's in London. Yeah.
Yeah.
So now then, when I look at the charts, I'm not really looking for tops and bottoms anymore. I'm just looking for areas of accumulation, and then how they've manipulated it as they've broken out, and then am I in a profit release phase? If I am, I can put the 90 bar tool on.
That's right.
And then put the 16 tool
and
on.
then you can say, hey, that was the top. Or that was the bottom. There is more. Traders are obsessed with finding tops and bottoms. Oh, I found the top. I picked the top. I picked the bottom. For God's sake, just don't forget it. Take the bit out the middle.
Your money.
Take the safe bit out the middle. Don't speculate on where a top might be. There is no. Look at a market, and if there is no top, there is no bottom. It's a constant stream of data that's constantly evolving round in a business model. So don't. You can pick a top. You can pick a top when you're in a profit release. Then you can go back and say, hey, that was the top, that was the start, and that's great because now you can put on
and
your
the profit release is the 90 pips. So I can keep, once it's started the profit release phase, I can put the 90 pips on, measure 90 pips.
Yeah.
And then every pullback, I can put another entry on.
That's right. You see what you've done here now? During this conversation, what we've done is we've taken the complex and we've reduced it down to something very simple, haven't we? Yeah, and that's all we have to do. I think it's the lawnmower lady. It's okay. Just hang on a second. It's all right. I'm honest. That's fine. I'm just coming to the end of the call. Oh, you got it stuck, have you? Okay, give me 1 minute and I'll be there. Okay.
Thanks, Martin.
Oh, hang on a second. There's another visitor as well. I'm sort of a lawnmower lady over here, and a friend has just arrived over here. That lady needs a hand with her lawnmower.
Okay, you sort her out, Martin. You sort her out. I've got enough information now.
Okay.
I know what I'm doing.
Let's catch up on our next call, okay? And we'll hopefully we won't have a crowd around us, lawnmowers and all that sort of stuff and everything else.
keep the lovely view though.
All right. Okay. Take care, and we'll catch
Thank
up soon.
thank you very much.
All right.
Thank you.
Bye bye.